Good NFP day, everyone. How's everyone doing? How you, Brock? Which one? Didier, Stavros, Deepak, Raj. Hope everyone had a decent week. And we're here to witness history this morning with this NFP number. No one on the planet ever, hi George, has ever seen a number we're going to see today. It's going to be interesting to see how it reacts. You know, you have a continuation move in the S&Ps. Just want to show everyone, after identifying this as a triangle, we're knocking on the door in gold. Okay, so the Bears are trying to put up a little bit of a fight here, but I think that they won't be successful. Maybe we get a breakout on the number. Intuitively, you would expect a lower dollar on economic weakness. Yesterday, we did have a stall. It's not complete. You know, on Fridays, this is when you look at your weekly chart. So even though the dollar came off, it's a good week, right? One of the strongest weeks we've had in a while. And the S&Ps, after posting a reversal week, I'm sure everyone that went home short, I thought that we could go deeper before this happened. And looks like we're going to make a new high in the S&Ps, not a new high above here, but a new recovery high looks pretty likely. The euro is trying to hold here, but the weekly, you know, barely, and it's not the end of the day. We may have a 2-week reversal if we could close above 108.22 on this. And EG is trying to do something right on a weekly basis. This will be most likely a 2-week reversal. Well, it's right there, 87.52. So we're right there on a few of the different markets here. What else did I want to touch on? There's a rumor Steve is taking a day off. The poor guy's exhausted from putting together almost the whole presentation for the summit. Was there anything else really? So those are mainly that. Anyway, looking at the yen on a weekly basis, yeah, recovered, but still a down week. I know some people they're looking for lows around the 105.70 level. That may take place next week. And I think that one of the, you know, bigger surprises, but, you know, it's still holding, is Canada here. So we tried to break out of this descending triangle. You could say it's a descending triangle if you use a flat line, or off these two lows, it's a wedge. All I know is that if we start taking out 38.5, there's big downside, because you just measure the formation on the loonie from the high of the move to this major support level. Underneath it, there's plenty of open space down here. So be careful and think about it. We basically had a strong dollar, right? Strong dollar. And at the same time, here's your weekly. I could talk a little longer because Steve's not here. So you had a strong dollar, right? So you would have expected a strong Canada, USD CAD. You did not. It almost traveled with the dollar. So of all the pairs or currencies against the dollar, this is quite a change. Don't you agree? I mean, USD CAD was leading this thing all the way up. And the dollar still had a good week, and USD CAD is lower. Yeah, okay. Oil could be, you know, definitely part of it, but, you know, let's call it a currency for right now. And, you know, US dollar Swiss was up. So if you want to just call it oil, whatever it is, it's different behavior than we've had for a while. When the dollar's strong, USD CAD has been under pressure. Watch this. I think Peter Goodburn was very bearish Canada at the summit, talking collapse. So This is really going to be your first weekly sign here at 38.5. Okay, FX trader says they're rumors. People are trading on rumors. Okay, thank you, Tian. Yeah, you learn a lot here in FACE. You know, it's not just a description of the markets. We try and teach along with it. And let's see if there's really anything else. I've been trying to bottom pick Euro Swiss. Doesn't look like, you know, it's a down week. It tried a few times. Even if we make new lows next week on Euro Swiss, it's really starting to grind something out here. I'm glad I didn't listen to Steve and increase my leverage. I've had a couple of winning trades off these divergences. There's no way, even if they take it down under these lows next week, look at the RSI, 43. There's no way in my mind that I could see, well, you know, anything can happen, but I really doubt that we're going to take out 30 on the RSI on a new low. So just some of my thoughts. Here's one of my strongest thoughts here is that you guys have to sign up and become part of our family. Who had a good week off some recommendations this week? I know there were some good calls. Blake was bearish Euro. You had some good trades? Brock did? Daniel? Daniel, are you a subscriber to our service? Okay. Figures he had a good week. All right, so Andre is going to be joining us today. We're going to get to look at some of his harmonic work, and instead of waiting for Andre to show up, there's his look. Saying the
Yeah,
Euro
Andre's
could
going
be.
to join us today, which will be nice.
Who's that, Andre?
Yeah. So
Yeah.
that'll be nice.
Okay.
It's good because Steve's not going to be here today because he's been working like
Yeah.
nonstop for the Trader Summit, and you know, he's just like, I need a day off. We're like, take several.
Yeah.
He's working his ass off. So we're happy that he's taking a day off at least.
All right. So Andre, you know, doesn't come in a lot. He comes in occasionally, and Grega comes in occasionally. But my point is, you don't have to wait for them to come into FACE. You know, you have all of their work at your fingertips. Okay, so even Greg is looking for a bounce from here in the Euro. See up towards 112. Okay, so you know you have all of this at your fingertips. And, you don't know how many times before ForexAnalytix there were certain guys, and a few of them are here on the team. I was always wondering, hey, I wonder what Blake's thinking in here with crude. You know, maybe I'd done an interview with him, or Grega, you know, I sure would like a nice wave count to what I'm seeing with 3 drives and divergences. And it really is nice to, you know, have that question answered by just clicking onto their looks. And, you know, it's kind of with me thinking that the dollar did turn this week, and just one more look at the Dixie. And this is going to be real important. So if we do fail right here under 98.22, we're going to 95 in my view, because you could take a measured move like this, call this a flagpole, and call this maybe a bear flag or a descending triangle. So just like Canada under the 38.5 level, the Dixie under 98 is going to trigger a pretty good sell-off and confirm most likely that we have a dollar top in. Okay,
Well,
so we had. Go
you
ahead.
know, the other thing, Dale, is with equities breaking higher,
Yeah.
and if you ask me, the S&P looks like we're going to go see the 200-day moving average again. So it
Where's
looks like we're
that?
going to, it's at 3,000. So
Is
the
that a
S&P,
weekly moving average?
no, daily. This
Oh,
is 200-day
okay.
moving average on the S&P. So you know, if we go to 3,000
Oh, yeah.
in the S&P,
right here, Blake's
That's
talking.
that's just going to usher in dollar weakness near term.
Yeah,
So and since we were setting up a head and shoulder pattern, it looks like it was just a setup, and we're just breaking higher.
yeah,
Then that's where we're going. And I'm in the camp that rates are at zero, everybody's underperforming, everybody's chasing the market higher. They need a place to go. Money's only going to sit on the sidelines for so long. I mean, when your money's not yielding anything, you have
yeah.
to put it to work. That's the whole reason why central banks put rates at zero. It's because it's like, okay, look, coast is clear, kind of, however you want to look at it. But
The wealth effect pushed people out on the risk curve.
we've got to. I mean, if
Yeah,
rates are at zero, where are you going to make yield? And if you're a boomer, okay, boomer, what are you going to do? You got to buy stocks. And then if you're an institutional, whether it's your CTA or you're a hedge fund, you're underperforming right now. You're not beating the S&P, so you've got to be involved. And if you're not involved, you're going to have redemption. So, whether you guys think it's the right, this is the place you need to be buying stocks with the global economy closed for a couple months, it doesn't matter. It's not. This isn't the economy. This is the market. So
yeah, it's a money game.
it is. Do I think that the stock market's going to take it in a sphincter here in the coming months? I do, but that doesn't mean that right now at this moment people aren't chasing, and that's exactly what's happening in the stock market. And then if you're talking today, you have a jobs report that everybody knows it's going to be horrible. If average hourly earnings comes in a little stronger, then
Yeah.
next thing you know, we're going to have the S&P is going to be at 3,000.
Blake, I have a nugget for you. I love bringing great guests on for, to edify the community and have some great content. But, we get pearls too. I get pearls too. And I know you respect Mark Newton's work. And when Mark was on this week, I know sometimes you're too busy to watch the webinars. He has a turn date off of Bradley model, which is the same model that caught the turn in January, February. So he was thinking there might be something next week for some type of reaction back to the downside, saying tech is leading the whole way. So if you look for a day where maybe semis aren't doing much, and maybe next week is the time to try and see. I think eventually we'll get at least a correction of this correction before we make new highs. So,
Yeah, I mean,
anyway,
look, I'm in the belief right now that the market is heading higher, and that's not, like I said, it's not because I'm bullish on the global economy. It's purely positioning. It's pure. Look, and I know I talked about this all week, really, with Warren Buffett. Warren Buffett missed the bottom. He may not be thinking anything is valuable at current levels to where he's a buyer, but he's not a CTA. He's not an institution. He's not, I mean, yeah, I guess Berkshire Hathaway as a, stock, they, want to stay invested, but
I was playing shuffleboard with him.
Yeah, you might have been back in World War One.
No, we were playing shuffleboard this week, in March at the Lowe's. So I knocked his disc off the whole court.
Did you? Good for you. So let's but again, look, here's the S&P. Here, this is the 200-day moving average. We're probably going to see somewhere up here, and as much as I want to be a bear, I do. I really want to short the stock market. But what I'm realizing, and what I've realized, is that flows are just going in that direction. You've got to just follow the money right now, and that's where it's going. And like I said, do you feel ultimately it's the right trade? I actually think that if you sell the S&P here and you close your eyes for a year and you wake up, we're probably going to be lower. And you'll probably be like, wow, I'm glad I sold here. But that doesn't mean between now and the next month, we can't, make it a little higher before rolling over. I still believe that, by summer, we're going to be sitting somewhere down here. Right. I just think right now, the price action and the state of the market is, that's kind of where everybody's got to go. Now, let me also say, let's talk a little bit about the Canadian really quick, because we got the numbers coming out in 15 minutes. So I got to kind of boot scoot.
Yeah, you got that support line there too. It's gonna be ugly under there.
Yeah, so the Canadian data, this came out at let's see, 7:47. All right, so that was 30 minutes ago, 28 minutes ago. Anyway, that came out via Bloomberg on a headline, and the dollar Canadian was sitting at 139.51, and I looked at that, and I'm like, man, that's a leak. And I was thinking, that's a better number than expected. So it was sitting right here when that came out. It was like right here, and I said, "Oh shoot! I mean, excuse me, sorry. I sold a bunch of dollar Canadian right here, and I told everybody in the chat room, I'm like, that's a leak. I just shorted the dollar Canadian." And then it dropped to 39, and I covered it. So I covered it, just took a quick 12 pips out of it. And I had a pretty sizable position. So that was a nice little hit ahead of non-farm payroll for me. And then I covered it. Obviously, I could have sold it again if I really wanted to, because I was sitting there looking at it as you started, and I'm like, I should be selling this up here again. I didn't. But the thing is the dollar Canadian, I had to make back a little bit of money from yesterday, because I actually bought this trend line down here, and then I got stopped out down here when it just kept breaking down, because I bought it at a 618, I believe, or is it the 50% retracement? Let me think about where that was yesterday. I have to go back to thinking what I was doing yesterday. It's a 618 right here at the 140. I think I bought it at 140.62, and then I closed it out like 140, 39 or something. I tried to buy it right here, and then it slumped, kept going. Anyway, the thing about the dollar Canadian, it does have a false breakout. And let's talk about stocks moving higher, because if the S&P moves higher, what do you think is probably going to be the best trade if the S&P moves to 3,000? What do you guys think? And I'm asking your questions at home or in your office or wherever you're listening to us to. I'm looking at the chat box. Let me pull up the chat. What do you guys think is the best trade? I'll tell you what I think the best trade is, but I'm already in. So I'm already in some from last night. And if you were in the chat room, I was short the Aussie yen at 69.02. I closed it at 69.12 last night, because I was like, I just don't want to be short the market anymore. I just don't, short risk. So what do you guys think the best?
There's a lot of answers.
I know there's a lot of answers.
Salma.
Well, Chad's in the chat room. Okay. That's like cheating.
Yeah. I think a lot of these are good ideas.
They are great ideas. We got everything from the Aussie to Canadian, DXY short, Canadian yen, Aussie dollar, Canadian yen long. A lot of different answers. Thanks. Somebody said Bitcoin.
We have some shooters in here.
Euro Aussie. Look, my trade of choice right now is short the dollar max.
See, Ronit guessed that.
The dollar max is what?
Yeah.
That's I sold some last night at 23.99 or 23.98, and I'm just sitting in it. And the thing is all I care about right now are equities, and I'm going to be here for the jobs report. So since Steve isn't going to be here, I'll be here with Stelios. But I think if the equity markets rally,
have a good weekend.
Huh?
I am here.
Go away.
Oh, dude, what are you doing here, man?
I'm gonna
boot a day off for him.
Please leave.
He's only going to do face. He's got it. You can't just go cold turkey. Steve can't do that.
Steve, you're supposed to go be a dad.
He's jonesing, man. He's got to
talk. What are you doing here?
All
You
right,
see,
Steve. Well, nice
Anyway.
to have you. Well,
not
anyway,
supposed.
he wasn't supposed to be here. Anyway, Steve,
He goes to WA meetings, Workaholic
I'm telling
Anonymous
you, he goes
meetings.
to AA. Like I'm
Not
his
AA,
the
WA.
face. Anyway, good to see you, Steve. You're
A
supposed to be
good
off
guy to
today.
have as a partner,
My
don't you think, Blake?
my name is Steve, and I am a market junkie.
Yeah,
can you
that's
read
Andre.
that?
Look,
Wrong
Andre.
Oh,
accent,
can you
Picasso.
read that on in the
Wrong
chat
accent,
room?
Picasso.
So wait, let me finish my thoughts about the dollar Mexican peso. So I think the dollar Mexican peso is going to break this triangle if the stock market. Now this is all predicated on stocks moving higher. So just so you guys know, the S&P's got to break into new highs. Then the dollar Mexican peso, I think, is going to correct, and it's going to correct back towards right here, towards 22. So, and I think that is a massive trade in the making. Now, would I be a buyer at 22? Yeah, because ultimately I think stocks are going to move lower. So doing that is what I'm thinking right now. Is trading the dollar Mexican peso, being short, and just imagine this. Okay, I just want you to just imagine the next couple of days. Whoops, let's go to the S&P. S&P jobs come out. It's horrible. We lose how many million jobs did we lose? 20. How many Stelios are we going to lose? 22 million.
22 million. Yeah.
So let's say we lose 22 million, or let's say we lose 21 million. The numbers are bad. They're bad, but not as bad as the economists believe. But still, the headline's going to be America loses 21 million jobs. That's going to and people. Let's just say average hourly earnings. This is all the Bloomberg data that you're seeing, expectations and whatnot here, right? This is Bloomberg for those of you that do not know. You got all this, that's U.S. data. It comes in and it's in line. Average hourly earnings a little higher. Stocks actually go up, and we end the day. The stock market's up 1.5%. You know what's going to happen on Monday? Everybody's going to be chasing the market, right? So not only do, and I'm just imagining this, all right? Let's say by the end of the day, we're here, right? We're higher. We're at 29.50. Come Monday, we're probably going to rally towards, above 3,000, probably hit this 127% extension. And then maybe we roll over midweek next week. It's middle of May, we get that sell in May go away. We hit the 200-day moving average. We probe above the 200-day moving average. Some selling comes in. What happens to the dollar Mexican peso through this whole move? Well, we trade down maybe to 23 and change, maybe to 22 and change. And then, you can trade it as a bounce here, right? So my trade that I really want to the trade I really want to be in right now is, short the dollar Mexican peso as long as equity markets continue to, show strength. That's the trade I want to be in. And I think that you can, there's other trades out there. Yeah, you could be long the Aussie. The stupid Aussie isn't going down. Looks like we're going to see 66 cents again. I've frustratingly tried to short the Aussie on so many different occasions over the last couple of weeks. Literally on Wednesday, I was thinking, let's just take this away. On Wednesday, the Aussie looked like it was breaking lower. I'm short the Aussie yen. I'm like, here comes my, home run. I'm going to make a good, 200 pips in my short, because I was short the Aussie yen from the gap fill right here at 70. And we were here on Wednesday, and I'm thinking, oh man, I'm going to, we're trading down to 66 yen, excuse me. I'm going to make a truck ton of money. And I get up in the morning and I'm stopped out. I made money, but still, I woke up and I'm like, what the hell? This thing's in my face. The Aussie has been one of the most frustrating shorts to try to make money. And I've been there. I've lost money doing it. I've made money doing it, but I've been frustrated. And I look at that Aussie, and yeah, it looks like we're going to 66 cents here. You know, Kiwi probably to 62 cents, right? I mean, you know, the dollar Canadian false breakout, probably gonna, you know, probably dropping below this, you know, 38.50, maybe down to 37.50. You know, you'd probably can do something like this and say, you know, just figure out where it's going. You know, dollar Canadian, yeah, maybe down to 36 cents, which is 618 retracement. You know, these are all very doable if stocks continue higher. But let's talk about if stocks move lower, because they can. Because ultimately, the economy is sucking wind. Will the stock market get a dose of reality and realism and start to roll over? It's possible. And if it does, then, you know, the dollar Mexican peso, which I thought was a good short here, it's going to be a great long, because it's, you know, going to pivot right off of this, you know, right off this trend line. So above 24, we're probably going to 24.50 and maybe even higher. So again, I'm not partial to doing. I'm short the dollar Mexican peso right now. I'm short some from 24 overnight, basically. I'm basically short at 24 from here last night, right here. I will benefit if the stock market rallies, but I am not married to this trade either. And I have about 5 minutes from now, I'm going to find out exactly what I'm going to be doing, because the numbers will be out in about 2.5 minutes. And then I'll have a very good idea of what I'm going to be doing over the next couple of days here in the next, you know, 5 to 10 minutes. So with that being said, we've got data coming out in just a couple minutes. Stelios, I didn't mean to cut you off. Steve, I didn't want to cut you off. Guys, good morning.
Good morning.
Good morning, mate.
I can't believe you said both shit and sphincter on the same webinar. With you,
well,
did.
It happens.
Trump, one of our attendees is saying that Trump is live on Fox News.
He
So
just he just said two
Fantastic.
things, actually. He said that he does not believe that China released the coronavirus on purpose. And he actually said virus got out of China probably through incompetence. So actually, I don't know what I would be more offended by, to actually be accused of doing it on purpose or to be called incompetent. But
yeah, who knows? Well, thank you, guys. The heads up there. Steve, Stelios, what are you guys' thoughts ahead of the jobs numbers we got?
And how
It's
are you
bullish,
doing your
mate.
day off, Steve?
It's yeah. A lot of things came up and it wasn't possible.
I think today's number is something that is not an unknown. You see, we know about the weekly jobless claims. We know that the number is going to be around 20 odd million. Like Blake said, if it's 21, if it's 23, 23 and a half, 20 and a half.
You know, Stelio, under normal circumstances, we would be able to say that, you know, the number is priced in. But then you have a look at the stock market and you're wondering, okay, in what way is it priced in? You know what I mean?
Oh, yeah, that I agree. We're at levels from, you know, Q3 last year. So, or, you know, February, before the big effect of the virus and the lockdown.
Hey, wait, real quick, guys. Can I just interrupt, just so everybody, if you use ForexAnalytix, right here is data flash. Just so you guys have, there's data flash here. And then let me move that out of the way really quick. Here's the dollar yen. We're going to watch the dollar yen, the price action of the dollar yen. You can see it right here. It should be the most influenced. Shoot, where's my, hold on. Let me move this out of the way. Sorry, I gotta get everything set. Dollar yen, data flash. Here's Bloomberg, so you guys can see how quickly the data comes through here and how quickly it comes on data flash. This is a $2,800 a month system on Bloomberg. Well, obviously there's more than just what you're seeing here, but I'm just telling you that this is included with your ForexAnalytix subscription. So just, Right.
Save $2,800 today.
Hold on.
Sign up.
Oh, here it goes. Boom, boom, boom. You see, it's 20. It's not
20
bad.
and a half.
It's not bad. It's not bad. Right?
Yen came back, so it agrees with you.
Yeah, I mean, look, here goes the stocks are going to rally. Right?
Hate it.
Dollar yen's ripping. Stocks are moving higher.
Look at average. Look at average hourly earnings, 7.9% year on year. I mean, this has been in 3%. How can you explain that? This is odd, isn't it? It's been around 3, 3.2, 3.3 for ages now.
Dollar euro Canadian's moving lower. Dollar Mexican peso is moving lower. Dollar Canadian should be breaking lower. Euro dollar is just kind of sitting there. Dollar yen is ripping. Yeah, I mean,
actually, Scott says the lower paid jobs are the first to go. That's a good point. So you lose the cheap jobs.
I wasn't even paying attention. What the Canadian data come in as?
Stelio.
-2, yeah. So,
so
in line with the rumor.
The rumor was right, right?
Yeah.
Well, there you go. That's it. Good data. Stocks are going to rip. I mean, we think good data. I mean, when you say good data, it's not really good data, but it's better than the market expected, right?
Yeah.
And this is the issue. Now you're going to have everybody like saying, screw it, I got to chase the market higher.
Yeah, because we just lost 20.5 million jobs in a month. So
does
that's
it make
definitely
sense?
very bullish.
It doesn't make sense. It doesn't make sense. But again, you got to put money somewhere. Money's got to go to work. I'll be a seller of stocks higher. Yeah, that's that's what I'm looking.
I think the Dale's target around 3,100. I think is a very good level if we get there.
Yeah, I mean, Dale, I don't think that's really too far-fetched, right?
No, there's some confluence of the megaphone line, and that was the top of the falling wedge that it broke out of at 2,400. So a couple of technical points up there.
It's entirely possible. I don't think it's like impossible. So now we just watch the S&P to see if we can break the overnight highs, which would be 29.30. We start breaching those levels, and feel a little bit better about being long risk, because now everybody's chasing at that point. So anyway, yeah, that's all she wrote. So now we have to watch. Let's see if these yen pairs make a move, because they've already. You can see how they all made false breakdowns this week. Here's the euro yen. The euro yen could actually get back above 116 and be very bullish. The pound yen's pushing 132, which is pretty key here. Aussie yen, you can see that's already making its move. New Zealand yen, it's pushing up here against resistance after making a false breakdown. Canadian yen, false breakdown. I mean, all of these look like they can stage some moves here. So, all right.
Getting a nice little wick in the S&P here from earlier highs on fading a bit.
Yeah, we'll see. I mean, we'll see. I'm sure everybody's sitting here trying to buy at these dips. So anyway, I'm going to pass it over to you guys. Steve, Stelios, it's all yours.
Thank you,
Have a great weekend,
mate.
Blake.
Thank you.
Thank
Have
you.
a
Thanks,
nice weekend.
Steve. Go enjoy the day at some point.
Yeah.
Okay.
I know.
Yeah.
All right. See you guys.
Bye-bye, mate.
So better than expected numbers in US and Canada as well. Actually, let me look at participation rate. Big drop in participation rate in Canada. Unemployment 13% from 7.8. Okay, I mean, these are all expected numbers. The question is, how do they evolve going forward? The market definitely liked this. My question is, if this payrolls number came in at 25 million, what would equities do? They'll probably anticipate, more easing, more everything.
I'll tell you what they would do. They wouldn't be doing anything, and everybody would be, oh, come on, we expected horrible data. I mean, expecting 22 million and getting 25.
Yeah, shorts will be getting squeezed, etc.
It's almost a statistical rounding error.
yeah, true. So that was an interesting print. We didn't have that much else actually this morning. We had a consumer confidence number out of the UK, very negative, as expected. German trade balance worse than expected. A lot of red numbers today, but obviously payrolls and Canadian data made up for that. What else was there? So there was really not that much overnight. Trump is really the only thing still happening where his administration is. We want to see how it goes with the Chinese, because there's a war of words happening right now, and it's not looking pretty. That's for sure. So
no, it isn't. But if you remember, we had already covered that in a conversation we had a couple of days ago here on the webinar. I think, Stelio, that more or less, this is another, you can call it a charade, you know what I mean? So there's going to be a lot of back and forward in throwing allegations and blame and whatever else. Do I think there is going to really be any substance to it? No. I can tell you, though, one thing, which is completely irrelevant to all that. Unfortunately, I wasn't on my computer, so I didn't save it. A very good guy I follow tweeted out, I think it was yesterday, a chart with the amount of goods that were supposed to be bought this year by China based on the first phase of the trade deal. And since already the first third of the year has passed, we were somewhere in the vicinity of 1/10 of the target.
So they have some catching up to do.
Yeah, if you really believe there's going to be any catching up to do. I mean, according to the target, yes. Now the question is, do you believe they're going to do it? Personally,
unlikely.
I consider it unlikely. Call me at best case scenario a skepticist. So I don't think so still.
Catching up is hard to do. Oh no, that was breaking up. Same thing.
Two other things I want to mention. One, Christine Lagarde said that the German court's decision regarding the asset purchase of the ECB will not change anything. So she's kind of,
why would it?
But I understand that, but we're just seeing a little bit of a not a feud, but you know what I mean. There's a difference of opinion. Let's see how that evolves. And we know the Germans and how they are, and they're very specific in the way they want things. They run things. That's why they're one of the best run countries in the world. So
exactly.
I am really looking with interest to see how that unfolds, because the risk is that maybe Bunds will be excluded from the asset purchase program. That's something that might happen. I'm not saying it will do, but it might happen. And
you want me to make the crazy prediction of the day for you?
Go for it. I'm short Bunds, so say it.
I think that if this happens, which is a big if, so in advance I have to say that it's a big if, but even if that happens, Stelio, I think that sooner or later the market will realize that it doesn't at all change the nature of Bunds, which is probably the only asset that approaches the concept of risk-free. We know that the concept of risk-free doesn't mean zero risk. It means the absolute minimum risk, right?
Yes,
which is a different thing. Not to even say that if the market starts considering it a little bit more seriously, they might even realize that if that happens, probably that eventually makes the Bunds even more risk-free.
Yeah, actually, that's a good point.
Yeah. I don't expect market participants to acknowledge or act upon it immediately, So the initial implications might be bearish for the bonds, as you mentioned. But I think that's also going to be a sign that Germany is probably one of the very, very, very few remaining places that are fiscally prudent. And that definitely adds value to the bond.
It's just that the negative rates, minus 60 basis points or whatever it is, 70, it's very difficult to, things have to be really bad for you to have to put your funds somewhere where you're basically getting eroded just for the safety of it. But anyway, that's my view.
The problem, Stelio, is that wherever you put your money, if that equates in getting your money back in fiat currency terms, you anyhow know that your, whatever value you're getting back is getting eroded by the month.
Yes, and actually, that's talking about that. That brings me to the other point I want to talk about, and it might come as a surprise, but cryptos. I am turning bullish on cryptos in general, not because I've struggled with cryptos over the years. I personally see quite a few problems with them, like the most fundamental thing where they say Bitcoin is limited to 21 million coins. Yes, but you have Ethereum, Ripple, hundreds of crypto coins that can
and you can create as many cryptos as you want down the road.
So for me, supply is not really limited because you have alternative altcoins. Granted, it's not the same, but they're still coins, right? They're still cryptos. But anyway, my view is that they will be eventually going higher for one and only reason, which is the massive now supply of money and credit, and basically the dollar value in, say, 10 years from now is going to be very diminished compared to today, the purchasing power, just like it has been every decade that passes. Remember, if you go to the supermarket with $100 in your pocket 20 years ago, you would buy like 3 carts of stuff. Now you buy, a little bag of stuff. So, due to this and in general inflation, by inflation, I don't mean the inflation of products, I mean the inflation of money. I think cryptos will keep going. Having said that, they're not going to be my first choice. I'd rather have hard assets and, real assets like, gold or, rare cars or stuff or land or stuff like that. But I think that's cryptos is another asset class that should, in the medium term, perform well. In the short term, who knows? They're very volatile. But
yeah, and the fun part actually, because people of course can't be in our chat, is that you wrote that yesterday. And if you remember, I answered back immediately. Unfortunately, still I've started agreeing with you.
Yeah.
Because of the exact reason you mentioned. Now, yes, and even funnier, a few hours later, I don't know if you noticed, we got the news that Paul Tudor
Jones, yes. I mean, come on.
Yeah, just a few hours after we had this conversation, we got the message that Paul Tudor Jones actually started buying. Me too. I don't think that. I think that there is still a good chance that cryptos are not going to work, but until they don't work, what we have going here with fiat money is definitely going to give them the ability to shine for a period of time.
Yeah, if you have cash, your purchasing power is getting eroded every day. End of story. So
yeah.
Hey guys, how's it going? It's Joe. Can I jump in?
Yeah.
Yeah. Hey, how's it going?
Hey, good,
very
mate.
Well.
How have you been?
Good. Hey, I just want to jump in here. Can we talk a little bit about this average hourly earnings number? That I know, Steve, you mentioned it, but this is unbelievable because 4.7 month over month compared to 0.4 expected.
You haven't seen
this is what the
anything
Fed uses
yet.
to gauge inflation. If this is
you
the number,
haven't seen anything yet. You want my prediction, Joe? My prediction
this is the
following.
reason that Paul Tudor Jones is buying Bitcoin.
Yeah, you want my prediction, Joe? My prediction is that you haven't seen anything with what they're doing now, which in essence is paying a lot of people more money than they actually made by working to not work. I think that this is just the beginning in wage costs. A lot of business people will find out that in order for them to bring back workers back to their jobs, they're going to have to end up paying more and more and more by the month.
Which creates more inflation, which is going to kill the Fed.
Eventually, that's the end game for the Fed. The Fed is going to be, in essence, demolished by its own creation. I mean, if you remember, I've been saying for quite some time that they should be careful what they wish for, because I think the only thing they will eventually succeed in doing is exactly this. What is exactly this? Is creating inflation. That's what they've been asking for. They've been claiming that their purpose is to create more inflation. And I think this is the only thing they will be extremely successful at. Not immediately. So it's not that we're going to see inflation like, immediately in a month from now. I mean, we're going to see the CPI picking up that much. But I do believe that in the medium term, inflation is going to really bottom. It might dip initially lower due to demand literally disappearing for many products. But I do think that once the CPI starts rebounding, it's going to come back with a vengeance, and it's not going to stop.
What happens if we see a situation where over the next 3 months, we continue to see readings like this for average hourly earnings or increases in inflation, but yet the economy is still in the same situation where the Fed is going to have to provide this economic stimulus to support it, basically?
The end game is going to be
that is going to kill
the end game is going to be as follows, Joe. They claim that they can do whatever they want because there is no inflation. When we start seeing inflation coming through, they're going to start trying to persuade people that inflation is transitory. But when inflation proves to be sticky, then they will have to make a very, very hard decision to either persuade people that this is okay, which is going to be extremely tough to accomplish. And even if they do accomplish that, it's going to be for a very, very limited amount of time. Or alternatively, blow up the economy, because we know that that an economy that is actually based on consumption, I've said that before, and many people might not have realized it because the number is unbelievable. It's out of this world. 90% of the GDP for 2019 in the US was consumption. Now just let that sink in. Now add inflation to that. So, it is what it is. At some point, they will have to realize that an economy based on consumption and credit will have to blow up if they want to fix inflation, because how will they blow it up? By actually having to increase rates. But this type of an economy cannot handle rate increases. We know that because forget about the coronavirus. 3 months ago, almost nobody knew the word coronavirus. 4 months ago, right? But before even all that happened, we know that they attempted to increase rates. We know that they failed. The repo market had started, getting strokes, and they had to start fixing it before anything that had to do with the coronavirus came in the market.
Back in September.
Yeah, exactly. So, it is what it is. Anyhow, we have Andre with us.
I just wanted to jump in and talk about that a little bit, but go ahead. I'll let you get back to your analysis.
I'm not going to do any analysis, actually, because we have Andre, so it's a good opportunity. I mean, anyhow, nothing has really moved since yesterday. So it's a good thing if we have a look at what Andre thinks. He might give us, a nice medium-term perspective to, to some of the key markets that we're monitoring here. Unfortunately, we've said that markets have started getting very correlated. I mean, even the FX currencies have started trading with risk on, risk off. So let's see what Andre has to say about it. What do you think, Andre? Is he unmuted?
I'm here. Sorry.
Oh,
Can you hear me?
Yeah. We can hear you loud and clear, Andre.
Okay, I have some issues with my microphone again. So
no, it's okay. It's okay. You sound perfectly fine.
Okay, let me try. I have just a few minutes. Can I take the screen?
Absolutely. Be my guest.
Okay. Share screen number 2, I believe.
Yeah, Diana,
Can you?
it's exactly what I was saying. States like Mass have a max unemployment right now of almost 1,500 a week. That's so much more than people make at their jobs. Exactly. That's why they're going to find employers are going to find a very hard time with restarting their businesses, not only because demand is not going to be there for many of the service sector businesses, but also it's going to be very hard for them to persuade their employees to come back, work taking some risk by getting compensated less than they would by being unemployed. I mean, there is an economic truism, which is you always get more of what you subsidize and less of what you tax. The US is currently subsidizing excessively, in some occasions, unemployment, and they're going to get more of what they're subsidizing, unemployment. Go ahead, Andre.
That looks almost like a poem for my ears, Mr. Steve. So, dollar versus just a few charts because we don't have a lot of time to argue with my charts today because next
USD,
week.
yeah, USDMXN. So the big question here for everybody is this a consolidation that will break higher, or is this some type of a rounded top formation that's going to completely break down and reverse lower?
Steve, I'm the one that thinks only about the price. I need the price to confirm that. Basically, we have a very well-defined structure at this point. Trading above eventually will trigger more upside momentum for the pair, and that will rise with the price. And we are now threatening the bottom of that structure. So breaking below that structure, I believe, and we assume the probability for more bearish or for bearish momentum from here should be followed. But at the same time, since we are threatening this area, I completely understand there will be a lot of people trying to short or trying to buy that bottom of the structure. So my thoughts at this point, and I shared these, or those two, the bearish butterfly and the bearish cipher pattern converging at the same point, well, suggesting that retracement from these highs. And at this point, we need to wait for the violation of this structure, which is now happening, I believe. We have also the weekly fractal position below, so I admit some pressure at that bottom. 2105 is my default projection for that, if that happens, obviously, for that fall. We have also a bullish sharp pattern projected at 2105, so this is actually the 200% Fibonacci extension and the 1/600 extension from this swing high, the last swing high, and the 200% Fibonacci extension is nothing more than a default projection for one edge and shoulder. So I admit breaking below this zone will throw the price to the default price zone. So I'm targeting this area for eventual pressure zone as potential support. We have also the previous highs, the previous monthly fractal resistance in 2025. So I will not ignore that possibility also. Obviously, as Blake has mentioned, we are now threatening that area. I admit well, we need to accept the longs positioned from this bottom, but I still believe we are trading lower from here. We have more 5-6 minutes. Let me try to show you my picture for gold, and let me go first of all let me increase my time frame a little bit into a 12 hours time frame chart. I'm not sure if I shared this chart the last time I was here, but well, Head and Shoulders, I believe Steve has mentioned this pattern before. I showed that pattern before. The violation of that structure and the default target for the pattern. So basically, I'm waiting to see gold being pushed at 1787, which is a 200% Fibonacci extension for the Heads and Shoulders. And if you go into a weekly time frame, and to finish and to pass to Dale, if you go into a weekly, actually, let me push into a 2 weeks time frame chart. We are also approaching the bearish pattern at 1822. So this is a 88% Fibonacci retracement from these highs to the most recent lows, or the previous lower lows, at 1046. So this is one last push to the 88% fib. So then the pattern will suggest a retracement to the 38% fib, 1525, which will suggest the retest of that monthly fractal printed last August 2019. So eventually a retest of that price area later. But first things first we need to see the pattern get completed above. Let's wait for that. Obviously, those fractals above the weekly fractal resistance at 1747. So we need to wipe that that fractal too. So I will try to jump in the next week, Dale, and show my more charts. And I hope
you have the time to show another chart, at least one more.
Oh, okay.
Steve's not going to let you get away early.
No problem. S&P.
Sure glad I don't work for that guy.
Actually, let me show you first my Bitcoin, because as Dale has mentioned before, we are now threatening a crucial price zone, which I believe, well, trading above, breaking above will increase the probability for more upside momentum for the Bitcoin. But let me try to decrease my time frame. So basically, we are now trading the bearish pattern territory. So I published this chart before inside our community at ForexAnalytix, and for the BAT pattern, well, when I project the BAT pattern, I always project the alt BAT pattern and the extended crab pattern above. So basically, we have 3 levels where the market may find some pressure, some resistance. So basically, we are now threatening one descending structure. So we have this trend line approaching from above. So this connects the previous higher high with the most recent highs from June, and now we are approaching that zone. We have also the monthly and weekly fractal there. We are trading the 88% Fibonacci and the bearish pattern completion point. So basically, what I want to share with you is actually 3 alternatives for the Bitcoin. One of them is a BAT pattern, finding some resistance there, eventually a retest of these fractals above the previous higher highs, and then a fall. So that may offer a trade. I'm not saying the price will reverse and keep trading lower. I'm trying to search for an opportunity to make money. I'm not trying to predict where the market goes for the next month or 2. So I'm just searching for an opportunity to get involved. So the first opportunity is right there, the 88% fib. So we admit the pattern suggesting the 38% fib. So we admit the price may fall from there. But then if the price fails, we have 2 options above. One of them is a false breakout above. So a false breakout above the trend line, the descending trend line, and a false breakout above the previous fractal, 1136. So eventually that's the 113% Fibonacci extension. And if that fails, we will see Bitcoin rising into those levels, 14,624. So the 168 extension. And eventually breaking above the previous highs from June 26. So eventually a push above. So this is my view for the Bitcoin. And just to finish with S&P, I published it before these charts. I was expecting, and I'm still expecting, a fall until the market proves me that I'm wrong. So to prove me that I'm wrong, I need to see the price breaking above these highs. So if the price breaks above this daily fractal, eventually I'm wrong, and the market will eventually also increase the probability for more upside momentum. I have the next pressure zone, a cluster zone between some Fibonacci zones at 32.64. So for S&P, so above that daily fractal, above 29.72, we may see the price eventually breaking and extending to the 113% fib. So basically, we're still trading the two around or very close to the completion point of this bearish shark pattern. So these bearish shark patterns requires a push to the 50% Fibonacci retracement, so a retracement to the 50% fib level. Obviously, it can fail, and if the market fails, as I said before, I admit a last push or new highs for S&P. So at this point, I need to consider the structure that we are facing at this point. So we have this ascending trend line as potential support, and if you go into a 1 hour time frame, and that will define where the price goes from here. So basically, we have the same criteria that I showed you before. So the 88% Fibonacci, the bat pattern, rejecting to trade above the daily fractal. So if that is the objective, we will see the price eventually finding some resistance there, and then a retracement. The 113% Fibonacci extension has a false breakout above these highs, so let's admit that possibility also. And if that fails, we will see the very similar as Bitcoin, as I showed you before. If we see, as I said before, if the bat pattern fails, you just grab it. So we will see an extension to the crab pattern, to the 160 on extension. I need to actually not there. I'm sorry. Let me correct that. That is a major bat pattern, or a major bearish alt bat pattern projected there.
Nice look, Sandre.
Let me correct this. So first of all, 88% fib, 113% extension above, false breakout above, and if that fails, we may see a push to the crab pattern at 160 on extension, which will put the price very close.
Do we have an interview today?
Yeah.
We do.
Think,
okay.
Yes. Let's just finish it. Thank you very much.
There is a question for you from FX Trader. Just a very brief answer, and we can probably have a webinar dedicated outside of phase for harmonics, because it's a quite nice type of analysis. So the question here is, how do you draw the bat patterns? He doesn't understand it, so he thinks that it's more or less randomized.
No, it is not, and I will show you. I will try to show that very, very quickly. Let me bring you into the forest, where everything can happen in the white charts. So basically, the bat pattern starts with an impulsive swing. Then we need to measure the first retracement. That retracement needs to fill specific criteria inside of a Fibonacci retracement. Basically, we need to see the price retraced between the 38 and the 50% fib. If the price retraces to the 61.8 Fibonacci level, it will change those criteria, and it will change the pattern that may develop later. So basically, we wait for the first retracement to the 50% fib, or something between the 38 and the 50% Fibonacci. Then we need to see the price retesting the highs or approaching the highs, actually another Fibonacci retracement. Basically, we will wait for the M shape. We will wait for the M shape for that same pattern at the end. So, but basically, we wait for another push or a retest of the highs without breaking the highs. something similar as 78% fib, 88% fib. Actually, a double top, we can face this as a double top, or let's consider this as a 50% fib. Then we wait for another push below, which we can use the same. We can use the same Fibonacci from here, but just to differentiate those levels, we wait for the 88% Fibonacci retracement. So that will complete the sequence for the bullish BAT pattern. Okay, so basically what I tend to do is to search for, and that will depend on the price structure that we are facing at that point and the market environment. On that point, if the market is squeezing high or lower, I need to try to understand if the price breaks, where it may find some pressure levels. So basically, BAT pattern, alt BAT pattern, and crab pattern extended below. So those are the criteria that I will search for to identify the BAT pattern. So we have the shark, we have the cipher, we have the butterfly, we have a lot of them, and all of them with very specific Fibonacci criteria. That's how we tend to measure those patterns. But those are not random, and specifically for the BAT pattern, we need an impulsive swing. So we need to identify that swing as an impulsive momentum, which should be followed by a retracement. Basically, and those three swings will not be as impulsive as the first one. So we need to see a first impulsive momentum followed by a consolidation process, a retracement, and then we buy the retracement again. We buy the 88% fib, expecting a 38, and then the golden Fibonacci as a second target. So that completes the trade. We don't know what the market will do after that. We target the 38% fib, we partitioning our trade, we close some of our profits, break even your trade, and if the market decides to rally from here, we will follow. But that we never know what the market will do. So I hope that answers your question. No, I don't use a software. All those patterns that you see inside ForexAnalytix comes from my own head and my hands. I don't use a software to trade. I hate softwares. I hate algos. I hate between commas because I'm a evolved human being. But actually, I don't use any type of algorithm or software to trade. I hope that answers your
I
questions.
hate making our guests wait 7 minutes.
Me too. I'm really sorry. I will try to compensate.
Well, Steve has to go to anchor school and learn that you don't ask a complicated question 1 or 2 minutes after an interview is supposed to begin. So anyway, thank you, Andre.
Dale. Thank you. And I'm sorry.
That's okay. That's okay. We learn. We're human. Anthony O'Hyan, I hope you're not a crab pattern after having to wait 7 minutes to be on, and I know you have to make the opening bell. Are you crabby now, buddy?
Not even a little bit. Marcus,
all right, you have the temperament for trading. So Andre's going to stop sharing the chart, and you could take over.
All right, I'll share my screen now.
There you go. So welcome back to Face, Anthony. How are you?
I'm well. Thanks for having me again.
Okay, we're having a little bit of Andre is one of the best. So how has the natural world, pandemic wise, treating you and your family and people you know, and then how are things going on the battlefield? I know I've never traded a pandemic before, so I'm guessing you haven't either.
Yeah, this is actually the first time I've ever seen anything remotely similar to a recession or a pretty steep decline. I mean, the only other thing I've really ever traded through, I'm only 23. So, I mean, I've been trading since about 2015 or so. It was the 2018 Fed lift kind of crash that happened there. Yeah. But this is far more steep and far more rapid, obviously. Yeah, my family's doing well. I'm actually in the Keys with them right now. Living in separate places for the quarantine thing. My parents are a little older, so I don't want to expose them to anything.
Good son.
It's pretty. Nothing's too crazy down here. I mean, things are obviously closed down, but nothing is out of the ordinary besides that.
Yeah, I know. I think for guys that work remotely for years, and I know, you're pretty young, but we're kind of used to being on lockdown.
Yeah, I'm always on lockdown between Monday
Yeah,
and Thursday anyway.
except you know what the difference is? It's when it's our choice. It's different than when we don't have the option.
Exactly. Yeah, freedom's everything.
Yeah. So what are you thinking here? The big debate, Anthony, is the bottom in? Are we going to retest the low, or are we going to make another low? Or are we blowing to new highs? Where do you come down?
So yeah, I actually went extremely long between 2200 and 2300. And I'll tell you why, actually.
Yeah, I'd like to know why. I had a wedge. Go
I've
ahead.
been monitoring this like insanely, and I've been only monitoring really the U.S. cases, since that's kind of the focal point right now.
Yeah.
But if you can take a look here at the total cases, and similar as the total deaths, well, I think a lot of people just keep looking at the linear pattern, the linear chart, and that just, I mean, if you look at this, you just think, wow, everything's worse and worse.
Yeah.
But then
Parabolic.
Exactly. If you know math, then you understand that this pretty steady slope. It's slightly, I mean, it's obviously trending kind of consistently up here. You go to the logarithm pattern, and you see that right around where we bottomed was that inflection point, March 23rd, where there's like an indefinite slope right here, where the slope started flattening out here. So that's actually where I said, okay, well, I think a lot of the mathematicians and people who really understand numbers are going to be looking here and saying, okay, well, it's obviously not speeding up as fast, and it's actually starting to flatten out on the logarithm curve. And you know that, it'll flatten out here before it flattens out on the linear curve. And same here for deaths. So that's why I decided, I mean, I went 2 times margin in my fund right around here, and that's worked out very well for me. I've been selling on most of the rips. I'm back to no margin just because I feel like we've ran so much, and I don't want to give back a lot of those gains. And also,
what did you buy, Anthony? The things that got us there also led the rebound. You had
exactly.
Amazon make new highs, and
actually,
semis have been hot. What sectors were you favoring?
So I decided I wasn't sure if we were gonna, anytime you make a bottom call, it's a little risky. You could go way lower, and that's gonna wipe you out, especially if you go double margin. So I actually was buying a lot of the BlackRock ETFs, IGV, IHI. So IHI's medical devices, and that's pretty much back at the highs. So I was doing long calls on a lot of those. I did long calls on a few specific stocks I like, NVIDIA, Lam Research. I did some long calls on Google. All those paid out really, really well. I've actually exited a lot of those positions because premium was pretty much worthless for call upside at that point. Even with the VIX so high, if you went out a little further, so I usually buy long calls 3 to 12 months out.
Weren't they expensive?
Yeah, they were definitely expensive. But I usually don't pay more than $10 to $12 for a long call. On that. So, NVIDIA was at 200 or so, and I was buying the 300s for January, and I got those for about 15 or 13 or so, something like that. I also purchased a ton of SPY and QQQ calls for 2022, and those were $5-6, and they went to 25 as soon as this market bounced up like crazy.
Are you booked? The quad, that's like more than a quadrupled. Do you book half when they've doubled for money management and
so
you have free trades?
Yeah, I'll roll up the strike. So I started with 300s for March 2022 on SPY, for example, and then S&P went up 15 or so, or SPY went up 15 or so. So then I'll roll to the 315s just to kind of lock in those gains. I'll get a few dollars each time that happens. And keep that locked in case we reverse. And I roll up to the same number of contracts. And actually, I learned the strategy from my mentor, who taught me how to trade. His name's Sam Perick. He runs a chat room service. Pretty good place. A lot of.
Is he on Twitter?
Yeah, actually, I'm in his chat room all day long, and he posts. This is his room. Posts nonstop commentary, news throughout the day. Here's a site if you'd like it. Yeah, Smarter Trading 4011.
Right.
And I'm in there all day as well, commenting, making posts. So yeah.
Mm-hmm. Cool. All right. So you have a relationship with someone who has a room. Let me ask you this. I never, I had technicals tell me about a low. I never would have thought about going to a logarithmic chart of cases, COVID. I happen to believe that there's going to be another wave this fall. So what's your outlook for the market from here? That was a great, great trades from there. Someone came with you and said, Anthony, I want to put $250,000 into your hedge fund here. How would you deploy it now?
Yeah. So what I'm doing now is, so I mean, I'm pretty much, I'm up, 30, 34, 35% this year. So, I mean, I just
take the rest of the year off, huh?
Yeah, pretty much. So what I'm doing now is I'm trading, some weekly options and next week options, kind of more risky stuff, but very, 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 very small size, just with a portion of the profits, not even risking principal capital. And so I've actually moved out about 25% of those gains just to have it sit in my cash account, collect interest, just because there's no point to give back that big lead. So what I would be doing now is I would just be buying indices, and I've been writing cover calls on a lot of indices. I was long.
But I'm getting the vibe from you. It's not as clear what to do here as it
so
was.
It isn't as clear. But what I do find interesting, and I'll show you here, is so the Russell is pretty much what got decimated during this time period.
Right.
Obviously, all the small cap stocks. But the S&P and the Nasdaq were dropping consistently here, but the RUT was holding. So that was another indicator and this is where we bottomed on all markets, like right around here. So that was another thing that told me that we were going to move higher.
That's an interesting tell. The weakness started to hold. Yeah. Okay.
Exactly. Especially since the RUT was down like 45%.
Okay, but you keep going backwards on me. So
yeah,
go ahead.
Explain what I'm thinking now. So
all right.
So I don't really use a lot of technical. I mean, I did a thesis in college about bullish pennants, so that's the only reason I use them, because I find them to be way more accurate than most other technicals. But I know a lot of people use the 200-week moving average, and I was trying to time the bottom using the S&P's 200-week moving average, and that was wrong. But then I realized that we bottomed at the Nasdaq's 200-week moving average. So then I was thinking, okay, well, let's use the Nasdaq to determine where we're going to go from here. And so if you look at this chart here, you see, we've got 1, 2, 3 tops here, and we broke out already a week and a half ago on the Qs. Yeah. And I mean, we bottomed before everything else on the Qs. And so now if you look at the S&P's chart, or SPY, just to make it simple, we are about a week and a half behind where the Qs were. And so I'm thinking we move higher. I think a lot of the fear with this virus is definitely canceled out, if not, negated by the Fed's actions in the markets. I'm obviously understanding that, there's a huge disconnect between reality and the market's movements recently. But that doesn't mean that it can't continue. And knowing that the Qs bottomed first, so they broke out first now. So I would think the market moves higher. I actually think that right here is, so 31.36 on the S&P, or about, 316 or so here on the SPY, is right where the Fed dropped their, they cut rates to pretty much zero at once and started doing
and
everything right
so
here.
about 3,100.
The first Fed bazooka came out. Yeah, 31.36 to be exact. That's my target, and at that point, I'm going to be mostly cash. I mean, I don't mind missing 8% or so here. We've already rallied 25+%. So, I mean, the money's been made, I think, to the upside. But there's a lot of things that can happen too. If the Fed drops another bazooka, I thought they were going to do one today. I guess they didn't yet, but it could come at any time. There's a possibility that we go back to highs quite quickly. I mean, we're kind of doing this sinusoidal wave moving right here. I think a lot of people are scared that the virus is going to come back in another wave, but if you look at a lot of the data, a lot of people who are running, analysis on the number of people actually infected, the number of antibody tests and everything, you'll notice that, the actual death rates caused by COVID versus with COVID are severely different. every death is being pretty much counted as a coronavirus death. Hospitals are getting 39K per coronavirus death, so that's a little bit of an incentive
God,
there.
I didn't know that.
Yeah, so there's a big incentive there for the numbers of deaths.
Do you think pharmacies are, pharmaceutical companies are, not looking after the public good with, what that hydrochloro, whatever it is a cheap drug that's been around for a long time, and instead they're discrediting it and going to the more expensive experimental antiviral? You think that's going on too?
I actually do. Yeah, I do believe that, because I even saw some studies that had 600 to 1,000 participants, and the numbers looked fantastic on using the hydrochloroquine and
antibiotic.
Yeah,
so because I actually know somebody that felt better a day after a doctor in the Caymans prescribed that to him. So it's not just hearsay. So everything's about money, isn't it, Anthony? So let's talk about real money. Any view on gold and what's happening here? It's
I definitely think gold's moving higher. I would be surprised to not see it go to all-time highs and break
1900,
break 1900, 2000. It's kind of telling you here that, we all, I think this is one trade that, a lot of the time when everyone piles in, I don't buy it, because sheep get slaughtered when everyone's in the same trade. But it actually looks like this is going to make a cup and handle and break out. I just use gilt as a proxy, but it's pretty much the same thing.
How about Bitcoin's been on fire?
Yeah, Bitcoin. Bitcoin is pretty much the same thing as a gold play, in my opinion. I just think that everyone's going to things that have limited supply, because technically right now not technically, definitely money right now doesn't have a limited supply. We're printing like the ink's about to run out. So yeah, I think Bitcoin, this is just and I actually did my research paper on Bitcoin, and all I know is that as boring
there's your triangles.
As boring as my triangles are, they are far more effective than most other technical analysis things by 15,
I like it.
By 15
the way
or 20.
It's compressing in here. Look, on the verge of a breakout.
Yeah, it's definitely possible we go back here and hit this lower leg, but I wouldn't be surprised to see it go to this 14,000 level, and and now we got institutions backing it, which honestly,
Paul Tudor Jones.
Yeah, Paul Tudor Jones. That actually makes me slightly more bearish than I was on it before.
Yeah, I know. I was thinking that too.
It's like when Trump
top. Yeah.
Like when Trump tweets stock markets at all-time highs, you kind of want to sell stuff. So
how did you become so jaded so young?
Experience.
Buddy? Huh?
A little bit of experience.
There's a big debate with what the Fed's doing about what's going to happen to the fate of the dollar. I'm not sure if you follow currency at all, but it's my belief it's kind of like the fulcrum that the whole wheel spins around. You have any views on currency?
Yeah, so I think the dollar is just doing some ridiculous stuff right now. It's going up when it shouldn't, going down rarely. I would think the dollar definitely is gonna lose some value. We're just printing so much. I think it might take some time. I wouldn't be surprised if it squeezes a ton and then retraces later in 6 to 12 months once the stimulus really gets into the market. Once the juice starts going. It takes some time for that stimulus to really hit the market in the way that everyone understands it and sees it happening. So, I wouldn't rule out it acting irrationally for, a few months, maybe 3 to 6 more months. But I would think the dollar goes a little lower.
Anything else you want to talk about, buddy?
Yeah, I think there's a lot of great trades going on here. The last time I was on here, I think I said Amazon to 2,500 when it was 1,700. So you see a lot of these, triple top breakouts are happening here. 24.75, pretty close.
Yeah, nice.
Yeah, and I've had a lot of conviction on Mealy since 550s, and that was just one of the biggest earnings movers. What is it? Sorry.
What is it?
Mercado Libre. It's the Latin American Shopify, basically. And they also do payment processing, similar to Square. So
Okay.
yeah, so my thoughts is a lot of these cloud stocks, SaaS companies, I mean, they're benefiting hugely. So I mean, I've been very long a lot of those. Some of my favorites, Mercado Libre, The Trade Desk, ServiceNow, Shopify. There's some really great companies, and I honestly don't think the pivot away from working from home, automation, kind of that whole thing, I don't think that's really going to go away with the coronavirus easing up. So I actually think there's going to be a pretty decent rotation away from big tech, the Apples, the Amazons, the Googles, and focusing on this next wave of big tech companies that will be in the future.
Okay, interesting. Anything on the cannabis stocks? They really didn't participate that greatly in this recovery, did they?
Yeah, I mean, my favorite cannabis place is definitely CGC. I think Aurora Cannabis is pretty much crap. A lot of the other ones just aren't even moving. Tilray is only good for short squeezes. But I mean, the cannabis sector is definitely lagging behind.
Why do you think that is?
I think people see that there's better plays. I mean, I think that, this has to do with people working, distribution, people going into the store and all that. So it's a retail business if you think about it, and I think that people are realizing that they don't want to be in these beaten down names just yet. I started taking positions in Norwegian Cruise Lines and Dave & Buster's. Like these companies have gotten absolutely slaughtered, and United Airlines.
Yeah.
And those are going to be very long-term holds. I don't think flying goes away. I don't think cruising goes away. Cruise lines are actually up 41% in their bookings for next year versus 9% estimate. So I think people are misinterpreting how quickly the economy is going to come back.
Yeah. So you think people are, just a little bit of history that in the last pandemic, we had a first wave. It kind of ended World War I. People were too sick to fight. And then we had Armistice Day. And then we had a second wave, which was worse than the first wave. So as we enter the fall flu season through the winter, you don't think there's going to be another wave, especially now that we're opening up now?
So I think two things are going to happen. I think that a lot of flus will be misconstrued, like just this typical flu infections will be misconstrued as coronavirus infections. Hopefully our testing is much more precise and faster by then. We're aiming to test 5 million people, hopefully that a day. Hopefully that happens. So I think that you're going to get a fake reported number and huge spikes. But, we've been testing about 12% higher each day. And the virus cases are stagnant in the US, 25 to 28 to 23,000. That wouldn't be happening if the virus was actually expanding. And that's why the logarithm chart's flattening out. So it is slowing down. And I've read a lot of reports in different countries in the world, some in San Francisco and New York, saying that there's 13 to 24% of the actual population already infected. So, you're getting close to herd immunity just off of that.
I thought herd immunity was 50.
Yeah, 50% of, but 20% or so is, you're not crazy.
We're not even halfway there.
Not halfway there, but we were thinking that it's more like 1% of the population was infected. So
okay.
Yeah, I think it's more of an interpretation thing. And even at 20%, it definitely slows itself down. And not to mention that we've confirmed now that you really can't get it twice from South Korea. And South Korea is very on top of their stuff in terms of their testing and their flattening the curve and their research and pathogens and such. So okay. I think a second wave could come out and hit the markets, but I think that the bounce from that will be even faster than the first bounce.
What a great way to end the week after that kind of NFP number. Some very optimistic, and I take what you say seriously, Anthony. You have credibility with me, and I know you want to make the open, so I'm going to wrap it here. And thank you again for coming here and sharing some of your ideas and your views on what's happening in the biological world too.
Thank you very much, Dale. Happy to be here anytime.
Okay, buddy. That's a wrap, everybody.
Thank you.
So have a great weekend, Anthony, and everyone else. You're very welcome. Remember, don't just count your pips, count your blessings. You're welcome, DJ, Brock, everyone. Have a great weekend, and we'll see you on Monday.
Perfect.
Adios.
Thank you.
Thank you, Anthony.